Year to date, Upstart stock was down nearly 47%. In the after hours, the stock's down about 40%. What is going on in the stock market and what is going on, investors? Hopefully, you guys are doing well out there. Time to talk about Upstart Holdings, ticker symbol UPST. The company just reported their Q1 earnings, and the stock is just getting absolutely obliterated. We'll talk about some of the reasons why. We'll jump into the financials as well. We'll take a look at these, and then obviously we're going to come over here and look at this from a technical perspective. Just a little short time ago, this stock was up over $400 per share, and now it is down under $50 per share. I bet you can imagine from a technical perspective what trend that is in. Now, hey, look, a lot of you have been in this market for a long time. Some of you might be more recent into the market. Even if it's just your third or fourth year in this market, you've probably seen the vast majority of your gains get absolutely obliterated. And so if you've gotten obliterated in Upstart or any stock out there, just know that it's not the first time it's happened to any investors. I tell you what, if you took your money and you started investing in 05, 06, 07, 08, you got absolutely destroyed into 09 as well. And if you're like me, and you started investing back in 1999, you started with $1,000. A year later, you were well over $3,000, only to come crashing back down in 2001, basically to that $1,000 level. So it's happened to the best of us. If you're a newer investor, it's part of the process. But one thing is for sure, we're starting to see massive, steep discounts in these stocks. Is Upstart a stock we want to buy the dip on, considering shares were well up over $400 per share? Is that right? We've got a market cap south of, I would say probably at this point, south of about $5 billion on this company. Now, that's on the heels of the Q1 report that came out during the regular session. Stocks down 8% after hours. We're seeing this stock down darn near 40%. Down here south of $47 per share. Now, revenue came in at $310 million. That was 155% growth, and that beat expectations by about $10 million. I tell you what, the newer investors are going to look at that, and they're going to say, how does a company that's doing 155% revenue growth, they beat expectations by $10 million? We'll come over here to the financials. I'll show you this company's actually doing it profitable. So they had $310 million in revenue. They had operating profits and net income profits. This company is positive from a net income perspective. And so a lot of investors are saying, well, how does this stock get destroyed? Well, folks, it's the Q2 outlook. We started this a few weeks ago when we did our Amazon video. I tell you what, after Amazon pulled in their Q2 outlook, that was a very, very, very bad sign. And then we got follow through and confirmation on that when Shopify and eBay and Etsy and a lot of stocks started to pull their Q2 outlook in. Again, the discretionary stocks, especially a website like eBay. It's like you don't need anything that's on eBay, okay? You can find that somewhere else as cheap or lower. There's a ton of like collectibles and like discretionary stuff that gets bought on eBay. When they start pulling in their Q2 outlook, that's when you knew things was really, really bad. And obviously Upstart did that on the most recent quarter as well. Take a look. They're expecting the upcoming quarter to become $295 million and $305 million on that revenue side. Again, that doesn't mean a whole lot on its own other than the fact you just printed a Q1 where you did $310 million worth of revenue. So you're going to slow quarter over quarter to 305. But Wall Street's expectations were 10% higher at about $334 million. So that's it right there. I tell you what, even in a normal market where we weren't having just every stock get absolutely obliterated on really any kind of news, this stock still would have went down by about 10%. Because when your Q2 outlook misses by that much, what ends up happening, and this is what the entire market is starting to realize, is that, look, if Q2's revenue is going to be off by 10%, does it get even worse than that? Because it could potentially get worse. You could move into Q3 and these estimates of $366 million, well, those could be off by 20, 30, 40%, and it could go down the line. This is why you're seeing a massive exit and massive sell-offs in this market, because there are people starting to look forward to Q3, Q4, and into Q1 of next year and say, hey, if things get a heck of a lot worse, well, stocks are still richly overvalued, because we see here with Upstart Financial, Wall Street still has the estimates of 30% growth, 50% growth in some quarters that are upcoming, just a year or two away. If all of a sudden for a year or 2 years, these companies are not able to grow at these growth rates, well, you tell you what, these earnings reports are just going to look like an absolute freaking disaster. And that's why these market caps, yes, this stock was way higher than this. I mean, we're talking about this stock was like a 40, 50, 60 billion dollar company. These market caps and these valuations are still probably richly valued based on the fact that Q3 and Q4, I don't know if they'll be any better than Q2. In fact, there's a lot of evidence that it might get even worse. So the pull-ins might come even faster and harder. We'll see evidence of that in the upcoming earnings season after this one happens to close. Now, the 310 million, look, I talked about how that's fantastic growth. You were at 121 last year. Now you're at 310. This company's also growing it profitably, but they're spending a ton on marketing, okay? So understand that their marketing spend went from about 50 to 133. So that's more than double. That's like 60, 70% more on marketing. Or should I say like 170%? It's a lot of marketing spend, okay? And you deliver that on the top line. Now, I have read literature in Upstart. They tend to cross-sell a customer. So some of this is kind of lifetime value. They spend quite a bit on marketing to acquire a customer, knowing a portion of those customers will come back and be a repeat customer and get more products from Upstart. So that's part of their business model. But they cut all these other costs while they're growing, and they're growing rapidly. Well, they grew their revenues really rapidly. And so our total operating expenses went from 105 up to 275. So you take this 310 million, you minus off 275 million, and you get positive income from operations at about $34 million, $35 million. Last year, you're sitting closer to about 16 million. You pay some income taxes. And yeah, this company actually prints out a profit, okay? On a diluted share basis, you went from 11 cents last year all the way up to 34 cents. So you more than tripled that on revenue growth of 155%. I tell you what, again, in the vacuum of just this quarter, this is fantastic, okay? And again, in the vacuum, not factoring in that the valuations of a lot of stuff and companies included has just gotten really bloated. This is a good quarter. This is a very, very solid company from an operating perspective. From a balance sheet perspective, everything looks pretty good to me. Their total assets just went up a little bit. Their cash went down just a little bit, but most of it looks like it got rolled into products, basically, essentially loans at fair value. So they've got about the same on that asset side. On the liability side, about the same as well. From a balance sheet perspective, essentially a sideways quarter for Upstart. Now, I don't analyze a lot of financial stocks, and I don't really make a lot of sense of cash flows from this company because I talked about from an operating perspective, looks pretty darn good. From a net income perspective, looks really good over at Upstart, but come here to look at net cash provided by operating activities, it actually goes negative. And I think it's because they have to recognize some really funky stuff in here that skews the numbers. But one thing that we can look at is stock-based compensation. Last year, it went from 8.6 million all the way up to 25 million. So of $32 million in net income, they used 25 million for stock-based compensation. Again, $25 million in stock-based compensation is nearly 10% of revenue. Revenue coming in at 310 million, and you compensated in the same quarter $25 million in stock-based compensation. That's incredibly egregious. I know these companies have just recently went public, and some of these things vest very quickly, and it's kind of front-loaded, and you're expected to maybe stay with the company for a long period of time after that, but that's certainly contributing to this stock going down as well. The fact that you have massive dilution on that stock-based compensation side with this company, and you see evidence of it here in the shares outstanding as well. Just a considerable amount of more shares year over year on a quarterly basis. Now, from a technical perspective, this thing's just absolutely blasted through any zones. This is what we call the Japanese steak knife formation. This thing is a falling knife, and I'll be repeating myself on a lot of videos from a technical perspective. You just steer clear of stocks that are making this type of move. There's absolutely no reason to step in there and buy the dip. There are people in retirement. I tell you what, the vast majority of wealth in the stock market is going to be tied up with people with lots of money, people that are close to retirement, people that are in retirement. They are pulling their money out of this market, and quite frankly, for good reason. So you and I I, as the buy and hold investor, the stock picker investor, just needs to let them pull their money out and let the dust start settling. Right now, we have a tornado, a hurricane, or an earthquake. We have every natural disaster that's possible onto these stock markets. And in a lot of ways, it feels like it's going to get worse before it's going to get better. I would keep Upstart Holdings on some kind of watch list. This would be a very, very speculative stock. Even if I decided to get into that, that would put it into like a 1% of my kind of net worth type of thing. Because I tell you what, when you've got all the stocks beaten down, I was looking at today, JP Morgan, Bank of America, all these stocks are getting absolutely obliterated. I don't know why I would want to go down the food chain on the financial spectrum to come to Upstart Holdings. But if I wanted to build maybe a basket of payment stocks and kind of fintech stocks, Upstart Holdings could be in there. I think this stock, longer term potential though, is probably some kind of buyout. I see some company acquiring Upstart Holdings, and some of you might say, well, what? That's not necessarily a bad thing. Well, now you're capping your upside in Upstart. Okay, that's kind of hard to say. But when the best outcome for Upstart Holdings is to be acquired by some larger financial institution that just kind of rolls its products and its AI and all this stuff that it does, not to mention the fact that it's profitable, someone's just going to buy this company. And so it's going to put a cap on how high this stock will go back. We are never, and I repeat, we will never, ever see this type of valuation on this stock. I can't even do the math. This stock was up over $300 and $400 per share. And even today, this is like a $5 to $7 billion company. I can't even do the math what it was at $300 and $400. You will never, ever, ever see that kind of share price and that type of valuation on this stock ever again. If you bought it up at these levels and you are still holding today, your lesson for the day is you need to learn how to get out of a stock and not let yourself get washed out this much. Hopefully you guys enjoyed today's video. Stay calm when things go on sale at Louis Vuitton or Nike. You don't panic, you get excited, and that should be your attitude for the coming weeks and potentially months ahead in this market. Hopefully you guys have a great day. Good luck with your investments.